Hello viewers, welcome to my channel. I'm Hasham. So now I'm going to start the problems on consignment accounts. The last two videos I have completed the theoretical part of consignment account. I have explained in detail regarding what is consignment, difference between consignment and sale, and what are the documents used in consignment, then accounting treatment. That means what are the journal entries, ledger accounts to be maintained by the consignor and the consignee, and different issues like calculating the value of unsold stock, value of abnormal loss, and different types of commission. All these things I have explained in the last two videos. So before start watching these problems, I expect my viewers to be thorough on the theoretical part. If you understand the theory, definitely you can be able to understand the problems. Otherwise, every problem will be difficult for you. So if you are interested in getting the complete command, follow my instructions. First of all, watch the complete theoretical video. If you have not watched earlier videos, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic Consignment Accounts. Watch the first two videos, be fully acquainted with the theory regarding journal entries, ledger accounts, then you come to the problem. Now I'm going to start the short problems. First of all, we'll complete the short problems, then main problems. First short problem. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So keep a hard copy ready and start watching this problem. First short problem. Messrs. Ram and Company of Calcutta consigned 100 cases of candles to Messrs. Hanuman and Company of Mumbai. So Ram and Company of Calcutta is the consignor. He is sending the goods. And the consignee is Hanuman and Company. That is the consignee in Bombay. Prepare an account sales from the particulars. This is the first problem. In this first problem, it is asking you to make the account sales. Already I have explained you in the theory video regarding account sales. It is a document which is prepared by consignee periodically and send this document to the consignor. So what the account sales will show? The account sales will show the gross sale proceeds. What is the sale proceed? From which he will deduct his expenses, his commission. If any advance he has already given to the consignor, that will be deducted. After deducting all, the remaining amount will be sent by the consignee to the consignor. So these are the details which will be disclosed in the account sales. So first problem, it is asking you to show the account sales. Gross sale proceeds 5,000. That means the goods are sold by consignee for rupees 5,000. Expenses incurred by Hanuman and Company, cartage 10 rupees, go down rent 40 rupees. These are the expenses incurred. Then commission 5%, 5% on sale, gross sales. Then Messrs. Hanuman enclosed a check for the amount due. So balance amount, the consignee has enclosed a check. So this is the information given. We have to put this information in the account sales. See carefully. This is the format of account sales. Messrs. Hanuman and Company, consignee. Account sales, gross sale proceeds 5,000 given in the problem. The total gross sale proceeds 5,000 less expenses incurred. How much expenses consignee has incurred? Cartage 10 rupees, go down rent 40, 50 rupees he has incurred. Deduct 5,000 minus 50, 4,950. From this he deduct his commission also. The commission is agreed at 5%. So 5% of gross sales 5,000. It comes to 250. Deduct 250, 4,700. Now any advance, if any advance is sent by consignee to consignor earlier, that will be deducted. But in this problem, we don't have any advance. Put a dash. Then 4,700 bank draft enclosed. This is the balance amount. 4,700 is the balance amount due from consignee to consignor. So consignee is sending 4,700 through bank draft. So enclosed bank draft. That's all. This is the format of account sales which is sent by consignee Hanuman and Company to the consignor. That's all. Now second problem. C and the Company of Calcutta consigned 100 radios to D and Company of Delhi. So C and Company consignor, D and Company is the consignee. To be sold on consignment basis, prepare an account sales from the following particulars. Exactly same way account sales we have to make. Then gross sale proceeds 100 radios. So you can see here D and Company is the consignee. They are making account sales. Gross sale proceeds 50,000. Then expenses incurred by D and company, cartage 500, go down rent 200, insurance 100. So cartage 500, go down rent 200, insurance 100, total 800 rupees expenses paid by consignee. Deduct 49,200. Now commission. How much is the agreed commission? Commission at the rate of 10%. So 10% of 50,000, 5,000 commission. Deduct 5,000, 44,200. Now it is given D and company enclosed a bill of at 3 months for the amount due. The amount due is 44,200. For this amount a bill is enclosed. So here bill enclosed 44,200. That's all. The 2 short problems are completed preparing account sales. Now third problem. Radhesham consigned 100 bales of cloth to Gopal Krishna. First of all, Radhesham is the consignor and Gopal Krishna is the consignee. 100 bales of cloth at rupees 5,000 per bale. Radhesham incurred the following expenses. Packing and forwarding charges are 500. Insurance in transit is 2,000. These are the expenses paid by Radhesham. Who is Radhesham? Consignor. The consignor paid 2,500 totally. Gopal Krishna received the consignment and sold 80 bales at rupees 8,000 per bale. They incurred the following expenses. See carefully. Total number of bales sent by consignor 100. Out of 100, 80 bales are sold by the consignee at rupees 8,000. They incurred the following expenses. Now consignee has incurred freight and cartage 3,000, insurance of go down 400, salesman's salary 1,600. Ascertain the value of consignment stock. This is a different problem. In this problem, it is asking you to calculate the value of unsold stock. First of all, how many bales had been sent by consignor? 100. How many bales are sold by the consignee? 80. So how many bales are remaining? 20. 100 minus 80. 20 bales are remaining unsold. So what is the cost of each bale? 5,000 rupees. First line it is given. The cost of each bale is 5,000. 5,000 rupees is the cost per bale. 20 bales are there. Valuation of consignment stock. The cost of 20 bales of cloth, because 20 bales are unsold stock. So 20 into rupees 5,000, 1 lakh. 1 lakh rupees is the cost. To this we add proportionate direct expenses. Proportionate direct expenses or non-recurring expenses. We call it as direct expense or we call it as non-recurring expense. Now what are non-recurring expenses? In the last video I have explained in detail. The expenditure incurred in taking the goods from the place of consignor to the place of consignee. Till the goods it is reached at the place of consignee, all expenditure incurred will be non-recurring expenses, direct expense. So in simple words, all expenditure incurred by the consignor will be direct. Apart from that, consignee expenses may be direct or may be indirect. Now how to find out whether direct or indirect? Cartage and freight is direct. Salesman's salary, go down rent, etc. That means after reaching the goods there, he is spending some amount on selling the goods. The consignee is spending some amount on selling the goods. That is called indirect expenses, not direct. So in our problem, the consignor expenses, packing and forwarding charges 500 and insurance in transit 2,000. Completely direct. And consignee expenses are freight and cartage 3,000. That is direct. And insurance of go down and salary, salesman's salary are indirect. Go down insurance and salesman's salary is recurring expenses. It is indirect expenses. This should not be taken. So consignee expenses, only one item is taken, freight and cartage. See here, proportionate direct expenses. We will not take total direct expense. We will take proportionate. Now, consignor, packing and forwarding 500, insurance in transit 2,000. That is completely direct. Now, consignee has spent freight and cartage 3,000. This is direct. The remaining 2 expenses given in the problem are indirect, should not be taken. Now take the total direct expense 5,500. Total direct expense of 5,500 on all the goods. All the goods means how many bales have been sent? 100 bales. On 100 bales, 5,500 is the total direct cost. How many bales are remaining unsold? 20 bales. So for 100 bales, 5,500 is the direct expenditure. But we require only for 20 bales because unsold stock is 20 bales. For 20 bales, how much? So 20 divided by 100 into 5,500, it comes to 1100. This is the proportionate direct expense. 1100. So here take 1100, add up 1,01,100 is the value of unsold stock. Value of unsold. This is the procedure of calculating the value of unsold stock. Here note, all expenses of consignor will be direct, but consignee's expenses may be direct or may be indirect. Just now I told you, freight and cartage direct expenses. Freight and cartage are direct expenses. Salesman's salary, insurance of godown and salesman's salary are indirect expenses. Indirect expense should not be considered in valuing the unsold stock. Clearly I have given the explanation. That's it. This is the end of problem number 3. Now I am explaining you problem number 4. Srinath consigned goods costing 25,000 to Srikant. Srinath is the consignor and Srikant is the consignee. What is the value of goods? 25,000. The recurring and non-recurring expense on the same amounted to 5,000 and 4,000. 5,000 are recurring expenses and 4,000 are non-recurring expenses. Srikant sold 3/4 of the goods for 35,000. Ascertain the value of unsold stock. Just like the previous problem, we have to find out the value of unsold stock. What is the total value of goods sent? 25,000. 25,000 is the total cost of goods sent by consignor to consignee. Out of 25,000, 3/4 of the goods are sold. 3/4 of the goods are sold. So how much is unsold? 1/4. 1/4 of the goods are remaining unsold. So see here, valuation of unsold stock, cost of 1/4 of goods unsold. So 1/4 of 25,000, 6,250. This is the cost. To this we add proportionate non-recurring expenses. Proportionate non-recurring expenses. So in the problem it is given the recurring and non-recurring expenses are amounted to 5,000 and 4,000. The first 5,000 is recurring, second 4,000 is non-recurring. The non-recurring expenses are 4,000. So we take 1/4 of 4,000 because goods are 1/4. The total non-recurring expenses are 4,000. So 1/4 of 4,000, 1,000. So take the total 6,250 plus 1,000, 7,250 is the value of unsold stock. That's it. Now we'll come to the next 5th problem. See the problem number 5. Raghavendra sent 2,000 kilograms of wool to Sanjay on consignment basis. Raghavendra is the consignor, Sanjay is the consignee. 2,000 kilogram of wool is sent. The terms were that Sanjay would get 5% commission plus 2% del credar commission. The previous theory video I explained you regarding what do you mean by normal commission, what is del credar. Normal commission is the normal remuneration which is paid by consignor to consignee, which is based on total sales, a percentage on total sales. So here 5% commission normal. Del credar commission is the extra commission which is given by consignor to consignee for bearing the risk of bad debts. If bad debts arises, then the loss of bad debts should be borne by the consignee himself. For that purpose, extra commission is given. Otherwise, if del credar commission is not given, then bad debt loss should be borne by the consignor. The loss will be on the head of consignor if del credar commission is not given. Once del credar commission is given to the consignee, he is free. The consignor is free. That means if bad debt arises, this bad debt should be borne by the consignee himself. So here 5% and 2%, total 7% commission will be paid by consignor to consignee. Sanjay sold 900 kilograms at rupees 80 per kilogram. Totally 900 kilograms he sold at rupees 80 per kg. 1/4 of the sales was on credit. One customer failed to pay rupees 3,000 due to him, bad debts. The consignee has sold the goods and out of the total sales, 1/4 of the sales is on credit sale. When there is a credit sale, there is a possibility of bad debts. The one customer has not paid the amount, 3,000 rupees bad debts. Now who has to bear this 3,000? Consignee has to bear, because he is getting del credar commission. If he was not getting del credar commission, then this bad debt loss will be borne by the consignor. But now this 3,000 should be borne by the consignee. Ascertain the commission payable to Sanjay. First of all, we have to calculate the amount of commission. Secondly, what entries will be passed in the books of Sanjay? Sanjay is the consignee. What entries will be passed in the books of Sanjay for commission and bad debts? What entries, journal entries in the books of consignee, Sanjay, for commission and bad debts? That's the problem. So first of all, sales made by Sanjay. How many kilogram he has sold? 900 kilogram he sold. At what price he sold? 80. So 900 into 80 is 72,000 is the total sale proceed. And what is the commission? Total commission is 5% normal commission and 2% del credar commission. So total commission will be 7%. The total commission is commission 7% of 72,000, 5,040. The total commission due to consignee is 5,040. Since Sanjay is getting del credar commission, so bad debt arising on credit sale should be borne by himself. I told you, consignee is getting the del credar commission, so bad debt loss 3,000 rupees should be borne by consignee. Now journal entries for commission and bad debts. First entry for commission. How much is the commission? 5,040. Commission is 5,040. From whom he has to get the commission? From the consignor. What is the name of the consignor? Raghavendra. The consignor name is Raghavendra. So entry will be Raghavendra account debtor to commission. Commission is an income. That's why commission will be credited. Commission account will be credited. So Raghavendra account debtor to commission 5,040. Being the commission due from consignor. First entry. Second entry, bad debts. Bad debts. Now these bad debts should be charged to commission, because he is getting one income, one loss. Consignee is getting one income. Which is that income? Commission. Consignee is incurring one loss. Which is that loss? Bad debt loss. The bad debt should be set off from commission. Entry will be commission account debtor 3,000 to bad debts 3,000. Being the bad debts set off against commission. That's all. These are the entries. So we have completed 5 short problems on consignment accounts. Come on, see the 6th problem. Now I am going to start the 6th one. Abhay sends goods on consignment to Rajendra. So Abhay is the consignor, Rajendra is the consignee. The terms are that Rajendra will receive 10% commission on invoice price, which is cost plus 25%. The commission payable to consignee is 10% on invoice price. And how the invoice price is arrived at? By adding 25% on cost price. Whatever is the cost price, we add 25%, that will become invoice price. So whatever is the invoice price, on that 10% will be the commission. And 20% of any price realized above the invoice price. That means commission is based at 10% on invoice price and 20% on any price realized above the invoice price. Then Abhay sends goods whose cost is 20,000. The cost of the goods sent by consignor to consignee is 20,000. Rajendra sold 3/4 of the goods for 30,000. Ascertain the commission payable to Rajendra. So in this problem, we are required to find out the amount of commission payable to the consignee. Payable to consignee Rajendra. That's what we have to find out. The commission calculation is 10% on invoice price and 20% of any price realized over the invoice price. Right? That you have to remember. Now, first of all, cost price of the goods. What is the cost price of the goods? It is given in the problem 20,000. The cost price is 20,000. And how much is the invoice price? 25% above cost. It is given in the problem 25% above cost. So 20,000 plus 25%. 25% comes to 5,000. So 25,000. Remember, cost price 20,000, invoice price 25,000. Now 3/4 of the goods are sold for rupees 30,000. It is given that Rajendra sold 3/4 goods. 3/4 goods he has sold for rupees 30,000, right? So first of all, commission is 10% on invoice price plus 20% of any price realized above invoice price. This is the condition given in the problem. 10% of invoice price and 20% of any price realized above the invoice price. Now invoice price of 3/4 of the goods. What is the total invoice price? 25,000. 25,000 is the total invoice price of all the goods. 3/4 of the goods is sold. So what is the 3/4 invoice price? So 3/4 of the goods sold is 25,000 into 3/4, 18,750. Actually, invoice price of 3/4 of the goods is 18,750. 18,750 invoice price of goods were sold for rupees 30,000. Actually, invoice price is 18,750. He has sold it for 30,000. He has sold excess. So how much excess price realized? 30,000 minus 18,750, 11,250 excess price he has realized. Actually, invoice price of 3/4 goods comes to 18,750, but the consignee has sold it for 30,000 excess price. How much excess price? 11,250. Now commission. It is given commission 10% on invoice price. Invoice price of goods sold. What is the invoice price of goods sold? 18,750. So 10% of 18,750, 1875. Plus 20% of the excess price. How much excess price he has sold? 11,250 is the excess price. So 20% of 11,250, 2,250. Add up 4,125. So total commission payable to the consignee is 4,125. That's all. Sixth problem completed. Now seventh problem you see. Prajwal of Pune consigned goods costing 16,000 to Giri of Hyderabad on consignment basis. Prajwal is the consignor, Giri is the consignee. The cost of goods is 16,000. Prajwal paid freight 800, cartage 150 and insurance 50. So all the expenditure incurred by consignor will be treated as direct expenses. So how much? Freight 800, cartage 150 and insurance 50. So total 1,000 rupees. 1,000 rupees had been spent by Prajwal. On the way, 1/4 of the consignment was lost by fire. Loss by fire means abnormal loss. So in the transit, 1/4 of the goods were lost by fire and the insurance company admitted the claim to the extent of 2,500. The goods were insured. So insurance company has admitted to pay only rupees 2,500. Ascertain the amount of loss and pass the entry for the same in the books of Prajwal. So in this problem you are asked to find out the value of abnormal loss. What is the value of abnormal loss? And we have to pass the journal entries in the books of Prajwal. Prajwal is the consignor regarding this abnormal loss. So first of all we calculate the value of abnormal loss. Valuation of abnormal loss. Cost of 1/4 of the goods sent on consignment. What is the total value of the goods sent? 16,000. It is given total cost, total value of goods sent is 16,000. 1/4 of the goods is lost. So 1/4 of 16,000, 4,000 is the cost. To this we add proportionate direct expenses. The direct expenses are all the expenses incurred by the consignor on freight, insurance, etc. So direct expenses are 800 plus 150 plus 50, 1,000 rupees are the total direct expenses. But we want proportionate. How much proportionate? 1/4. All the goods are not destroyed. Only 1/4 of the goods are destroyed. So we'll take 1/4 of 1,000 is 250. So add up 250, 4,000 plus 250. 4,250 is the value of abnormal loss. 4,250. And amount admitted by insurance company is 2,500. Insurance company agreed to pay only 2,500. That means net loss to the consignor. Net loss to the consignor is 4,250 minus 2,500. 1,750 is the net loss to be borne by the consignor. Now what is the journal entry in the books of the consignor? First entry regarding abnormal loss. The entry will be abnormal loss account data to consignment account. The entry will be abnormal loss account data to consignment account 4,250 being the goods lost by fire. Now, how much is the amount admitted by the insurance company? 2,500. This 2,500 is the amount receivable from insurance company. So we debit insurance company because amount is recoverable. Insurance company has admitted, they agreed to pay. So entry insurance company account data to abnormal loss account 2,500 being the amount admitted by the insurance company to be paid. Now abnormal loss is debited by 4,250. Here abnormal loss is credited by 2,500. Still abnormal loss balance is 1,750. This abnormal loss balance will be transferred to profit and loss account, net loss. So net loss 1,750. Entry will be profit and loss account data to abnormal loss account. Profit and loss account data to abnormal loss, being the net loss transferred to profit and loss account. Now here abnormal loss account is closed. Here we have debited by 4,250, here credited by 2,500, here credited by 1,750. That's all. So these are the journal entries to be passed in the books of the consignor regarding abnormal loss. That's it. Now, eighth problem. This eighth is the last problem, last problem. Only 8 short problems are there, and eighth problem I am reading out. 100 tons of coal are consigned at 300 rupees per ton. The consignor had sent 100 tons of coal to the consignee at rupees 300 per ton. Freight and insurance paid by consignor amounted to 2,000. Direct expenses paid by the consignor. So 100 into 300 is 30,000. The cost of the total goods is 30,000, on which direct expense incurred are 2,000. So total cost will be 32,000. And loss due to loading and unloading of coal is estimated at 5 tons. When the coal is loaded and unloaded, there will be some loss. Some powder will be made of the coal. That means there is a normal loss. This loading and unloading loss is a normal loss. It's an expected loss. So when 100 tons are sent, 5 tons will be lost in loading and unloading. Then the net coal available will be 95 tons. By the time it is saleable by the consignee, it will be only 95 tons. The consignor had sent 100 tons, but the available coal for sale is 95 tons because 5 tons will be lost in loading and unloading. 76 tons of coal is sold at rupees 400 per ton. Ascertain the value of unsold stock. How many tons is the unsold stock and what is the value of unsold stock? That's what we have to calculate. So first of all, ascertainment of the value of unsold stock. Cost of 100 tons of coal at rupees 300 per ton, 30,000. This is the cost. Direct expenditure, freight and insurance 2,000. Total cost is 32,000. The total cost incurred by the consignor 32,000. 5 tons of coal is lost in loading and unloading, which is a normal loss. It is expected loss. Now 95 tons will be available for sale. When the consignor send 100 tons, it will finally available 95 tons for sale in the hands of consignee. The total cost of 95 tons coal will be 32,000. Now we should not treat this 32,000 is the total cost for 100 tons. We should treat this 32,000 is the total cost for 95 tons. Because the normal loss will be adjusted in the available coal. So 95 tons will be available for sale. So total cost of 95 tons of coal will be 32,000. 76 tons of coal are sold. It is given in the problem. The consignee has sold already 76 tons. So how many tons of coals are remaining? Totally 95 tons of coal. Out of 95 tons of coal, 76 tons of coal are sold. So remaining will be 19 tons. Number of tons of coal remaining unsold is 95 minus 76. 19 tons of coal are remaining unsold. Now we have to find out what is the value of this 19 tons of coals unsold. The value of unsold stock of 19 tons of coal. For 95 tons of coal, the total cost is 32,000. This 32,000 is the total cost for 95 tons of coal. But how many tons are remaining unsold? 19 tons. For 19 tons of coal remaining unsold, how much cost? So 19 divided by 95 into 32,000. You will get 6,400. The value of unsold stock. the value of unsold stock of 19 tons of coal is 6,400 rupees. That's it. So I have completed 8 short problems on consignment. Each problem is different. Every problem is different. So watch these videos once, twice, thrice to get the complete grasp on the subject. If you want the complete command, don't watch once, twice, thrice you watch. Next video I'll start the main problems on consignment. If you are satisfied with my lecture, if you think that these lectures are increasing your knowledge, enhancing your knowledge, you are getting more confidence on the subject, if you feel happy by watching this video, give a like to these videos. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, I'll start the main problem in the next video.